I don't know if y'all know this, especially y'all new people, but you have to pay taxes. So and Carson doesn't take it out of your commission. So you have to pay estimated taxes either quarterly or at the end of the year in a big lump sum. So, I mean, we're just going to talk about some best practices. I've been paying estimated taxes for 6 or 7 years now. So, and really my accountant handles it, but I pay it, but he handles like how much to, like how to file it and everything like that. So I've got a list of accountants here that are good. One of them, the first one is the one that I use, Steve Slaughter. He's in Foley for you beach people. And he's really, really good. Been doing it for years and years and years. Hey.
Hey.
Here you go.
Thank you.
Yes, you're welcome. The other one is Byers and Associates in Daphne. And Clifton Snellman went to high school and is real good friends with Ben. And Ben has used him for his taxes. Thank you, Maya. So we know both of those. Yeah.
Who did you say for the beach?
Steve Slaughter with Johnson Slaughter Driver Northcutt.
Slaughter. Okay.
Yeah, Steve Slaughter. So they're all really good. They can also help you set up an LLC or an SCorp so that you can have your monies and liabilities and everything protected if anything were to happen. So I recommend doing that for sure, either an LLC or an SCorp. There's benefits to both of them. So talk with the accountant to see which one will work better for you. I started out as an LLC, and then once I started hiring and growing things, I switched to an SCorp because that allowed me to take a salary out of my commission as well. So I get a W-2 from myself and a 1099 from Keller Williams. So I look less like a self-employed person and more like a W-2 person. So that helps in some tax benefits as well. Okay, so I don't know why I brought this Ignite thing in here. For the estimated taxes, I'm giving you this form 1040 ES, and it's like a whole bunch of instructions, and then the back couple of pages are the vouchers. So what you would want to do when you get a commission is have like a separate account, savings account, whatever, but a separate account. And you take your commission, we'll say it's $1,000 just for ease of math. And you'll put 30% of that into a separate account, and that's for your taxes. Now, if your accountant says take more or whatever, then do what your accountant says. Or if they say, well, if you're not going to make this amount of money this year, then you really only need to put aside 20% or whatever. But rule of thumb, 30%. The rest of it can either stay in your normal account, or you can split it off however you want. If you have like a wedding fund for your child or something like that, do whatever you want with it. Business expenses, whatever. But the 30% is for the taxes. So then from the 30%, I typically do 5% goes to the state, and then the other 25% goes to the feds. So when you come in on these vouchers, there's one for every quarter, and it tells you when they're due. So it really makes it really easy. After you know how much you're giving them, it makes it easy. So you've got voucher number 1, and then it tells you the due date is April 15th, 2021. So it tells you exactly when you're supposed to send it by. And you just fill it out. You put how much you're paying. This one is for federal. It says Internal Revenue Service, so it's federal. There's one also for the state that says Alabama Department of Revenue. So you'll have 2 different vouchers. You can also pay online if you want. I do the vouchers just because I can make a copy of it and send it to my accountant at the end of the year that says this is what I paid in estimated taxes and this is when they were sent and that kind of thing. But you can pay it online if you want to now. They didn't used to be to do that. So you fill out your voucher, put your check with it. If you're doing it like that, I do recommend making a copy of it, of the voucher and the check, where maybe even the envelope if you want. That way, if the IRS says, we never got it, you can show them like, this is where I sent it and when I sent it. But it's really just a matter of, if you don't pay the estimated, then you're gonna owe a big chunk at the end of the year. You may still owe more at the end of the year if you didn't estimate correctly, or you might get some back if you overestimated, but at least it's not gonna be as big of a chunk. So get with the accountant. If you haven't talked to an accountant, I highly recommend it. That being self-employed is much more difficult to do taxes than it is when you're a W-2 employee. There's a lot more forms, a lot more that goes into it. You can deduct a lot more. You can deduct your whole entire car. If you ever work from home, you can deduct like square footage in your home that you consider your workspace. So there's all kinds of stuff you can do. So get with an accountant and make sure that you're doing it the right way, because you don't want to, at the end of the year. I mean, I've known people that they don't account for this 30%. They don't even account for 5%, and they spend it all. And at the end of the year, they owe, 10 grand and they don't have it. So then you have to file an extension and all this stuff. So I highly recommend doing it this way.
And there are penalties on top of that.
So there are some penalties. If you pay one estimated tax, like if you do Q1 but not Q2, and then you do Q3, then they could penalize you for not doing Q2, because technically when you tell them you're doing estimates, then they expect it to be due on certain dates. If you don't do any estimates during the quarters and just do it all at the end, then they're not expecting them in certain dates, so they don't penalize you. So there's a possibility that you get penalized, but it depends on how you file it too. So you can do it either way. If you start doing estimated quarterly, then continue to do estimated quarterly, because they'll be looking for it. So there's a bunch of, within these instructions as well, there's a bunch of calculators. So it tells you, like if you're married filing jointly, what your deduction can be. If you're head of household, what your deduction can be. If you're single or married filing separately, what your deduction can be. So if you're doing it on your own and not hiring an accountant to do it, then make sure you read all of these instructions, because there's a lot of information in it. When the payments are due, April, June, September, and then January for the fourth quarter. So it's not due December 31st, it's due January 6th for the fourth quarter. But all that's in there. Who to call at the IRS for questions, where to go, where to mail it. So for the IRS one, for the federal ones, for Alabama, we mail it to a different address than like the people that are filing for Arkansas. So you got to make sure you send it to the right address. That's on page 5. There's all kinds of stuff. And then on page 6, there's one of these little calculators where like you fill in the blank and then you subtract A from B and get C, and then you just put another number, and then you can hopefully get a good rough estimate of where you're at, and then divide it by 4 or whatever you want to do. Now, sometimes we make more in the first quarter than we do the fourth quarter, because the fourth quarter's Christmas and the first quarter is going into the spring. So it may not be the same every quarter, and that's okay. That's why you just take the 30% and then like April 10th or whatever, divide it out. Okay, I have $4,000 in my savings account for taxes. 5% of that is going to go to state. 25% of that's going to go to federal. In the next quarter, you may have $7,000 in the account. 5% of that $7,000 go to state. 25% of that go to federal. And just keep track of it. So it may not be the same every time, and that's okay because it's estimated. So. On page 7, there's some schedules as far as like what your rates are over a certain income amount. Y'all, this right here is exactly why I pay an accountant to do it, because I don't have time to figure this out, nor do I want to.
Too hard.
Yeah, I don't
pay someone to do it.
Pay them to do it. Pay the professionals to do it. And then I filed my own taxes one time, and the one time I did it, I got audited by the IRS. And I ended up not getting the refund I was supposed to get because I didn't have the proper documentation to prove what I had filed. So it was just a wash. But since the accountant's been doing it, when the IRS sees it coming from a professional, they tend to audit those less because the professional is liable for doing it correctly. So if something's wrong, your accountant is liable for it, not you. And they will have all the documentation to file to prove what was what, basically. So it takes a lot of liability off of you and your business. I highly recommend doing it. It's worth it. It does, I mean, it definitely costs some money. Steve Slaughter gives us a family discount because he's a father-in-law, maybe. So we get a little family discount, but it's still expensive. So get quotes. These are not the only ones in the area. These are just the ones that I know personally. So questions? File your taxes. Don't not file your taxes. Just because they're not taken out of your 1099 doesn't mean you don't have to pay them.
So if you do it quarterly and like you have a slump or you stop for a quarter and you don't make anything during that time, you still file 0 just to show filing something?
You can, yeah.
So
If you
that
don't
way
make
you
any
avoid the penalty, potential penalty?
potential penalty, yeah. I mean, it wouldn't be a bad idea just to put a 0 in there, or and like maybe a note that says no income made or something like that. But yeah, just to have it
if
on
they're
record.
expecting it, you know.
So like last year was strange because of COVID, so all the tax things were delayed. So instead of filing the first quarter in April, I filed the first quarter with the second quarter in June or July or something like that. So I sent them both at the same time because they had extended all the dates. So I still filed it, it just went together.
I
Questions
was
for
audited
me?
one time and it's not fun.
You did what one time?
I said I
Audited?
was audited one time.
Yeah.
Not fun.
It's not fun. They ask for stuff that you're like, I don't know. I don't have that. I don't even know what you're talking about. So just keep it. Just keep the money. It's fine. Don't talk to me anymore. Yeah, it's not fun. Not fun at all. Questions from the beach?
Sorry, we were unmuted. I think we're good. Can you just email us those slides?
Yeah, Melissa's emailing the packets to Jen, so Jen can print some off for you, and it's got the accountant names and phone numbers and emails and addresses and everything here, and then the second part is the federal packet with the vouchers. If you want to find a state packet with the state vouchers, just Google Alabama Department of Revenue self-employment tax vouchers, and pull it right up.
All right. Thanks, Sarah. You're amazing.
You're welcome. We got plenty of time for just to discuss anything else if y'all want to. Any issues or questions that have come up? Questions we need help with? No, everybody's perfect.
No, we're not. I'm just trying to get my business started. It takes a while to get it going.
It does. It does. It takes a while. Don't feel like you're behind because you're not. As long as you're doing the activities with calling and emailing and, you know, talking to people, passing out your business cards, putting people in your database, you're doing the activities, it'll pick up.
Yeah.
But it does take a little while. It definitely does. I mean, that's why we say, like, if we were to not do any business, and by business I mean phone calls or emails, if we weren't to do anything for the month of January, it would probably be April or May before we have a paycheck, because you have to like pick up all those activities again and get it rolling, then get under contract and close. So it's like a 90-day kind of window there where you have things you have to take care of. That's no shit. That's what we're talking about.
If you can't get here on time, just get here when you can.
Well, I was looking at property, sir, so I was, you know,
That's a good excuse.
in the rain.
Looking at properties in the rain. Oh, not fun. That's why you buy boots. Gotta have boots. Especially here. Rain boots are like
Necessity.
necessity. That is a business expense you can write off on your taxes because it's a necessity. all your gas. I always keep, get a receipt and put an envelope in your glove box and put all your gas receipts in the envelope in your glove box. At the beginning of the year, write how many miles your car has on the envelope. And then at the end of the year, write how many miles your car has on the envelope. That way you can tell exactly how many miles you drove in that year for your car depreciation.
I thought you had to keep track of it. What was separate from
If that,
business and what was.
if you have a car and that's your personal and your business car, you may want to keep track of it separately. But like for us, we have another car we can use for personal. So like my husband's truck is our personal vehicle and my car is the business vehicle. So I keep all of my mileage from my car as business, whether it's personal or not. It's business because I can say my personal miles were done on my husband's truck.
But if you use Google Maps, it'll give you a summarization per month.
Yeah, there's a few apps and websites that'll keep track of it for you if you want to go that route. There was one we were using.
I put everything on a spreadsheet and then I just, keep it every month.
Yeah, you can, if you
That's
want to do
probably
that,
too
you can.
detailed.
But yeah, I've never needed to do that, but if you need to, like if you have another vehicle that you can say you
Okay.
use for personal, then there's no need to do that. You can just say, all the miles I put on my car for this year were for business because my personal ones were done on the other car.
Okay.
Yeah. I'm trying to think of any other tips and tricks I have for that. Any office supplies, any like clothing even, you can consider wardrobe and shoes. You can try to write off your like hair appointments
Yeah.
to stay professional. They are.
Others are going out.
Yeah. You can try to write that off if you want to. Any tithes or donations, tithings to your church or donations to whatever. If you decide to sponsor a sports team and put your name and phone number and Keller Williams logo or whatever on the flyer for the sports team, you can write that off. Let's see, all of your expenses for like your office fees here, you can write off. Like if you buy a Red Day shirt for $10, you can write that off. Like literally everything, keep track of all of it. It's a good idea to do a PNL. I'm gonna share screen here, guys. If I can figure out how to do it, share screen.
What does the PNL stand for?
Profit and loss statement. So let's see if I can find in Google. I don't know whose I'm logging into here, but we're gonna do it. In Google, right up here, you click that and you click on Drive, the triangle. You can type in, I don't know who's in here, so don't pay attention to what's on the screen. Type in financials. Hang on, I'm gonna do this first. Go to new, and then a Google Sheet from a template. Okay, so now there's templates in here that you can use for all kinds of things. One of them is this financial statement. Okay, click on that. And every month when you get your bank statement in the mail or online or whatever, print it out. It's easier to do it printing it out. You can come in here and put your transactions. So you can set all this up, and we can do another one of these specifically for P&L statements because there's a lot into this. But if you keep track of this P&L statement, it'll tell you, it'll give you a nice little chart of what your income was and then what your expenses were for each month and then also at the end of the year. So I do this and then I print it out and send it in with all of my tax stuff to my accountant so he can see exactly what my expenses were. And if he needs receipts for big stuff, like if I buy a new laptop or something like that, then I've got the receipt that I can print out and send it with it as well to show that actually was a business expense. So we'll do another Toolbox Tuesday for P&Ls because there's a lot that goes into that. But it's free in Google. It keeps track of it. You can customize it for whatever you want. Like if you have, you know, 4 different cars and you use one for business and, or maybe you use 2 for business. Like if you're a husband and wife team and you both use each one for business, you can separate it out, his car, my car. But you can customize every little thing on here. You can do food, you can do, you know, your office bills, your wardrobe, you can do, I mean, whatever you want. If you pay your own insurance, you can put that on here to write that off.
But I thought food was not or you mean meals or?
Yeah, like if you're showing houses and you stop for lunch, write it off. If you take a client out for dinner after,
I thought it was only,
Closing.
I thought it was a certain percentage or something. You could
well, keep track of how much you spend on here.
You
And
just
then
want
when you
expenses,
file, yeah, when you file at the
and then they
end,
can,
they can separate the
Right, okay.
percentages. Yeah, that's why you hire an accountant. They do all that. You just give
unless you
them the
marry one.